Hey traders, Raghee here, and in this recap video, I'm going to cover a question that I've been receiving a lot lately, which is, what can you tell me about the yen? What are some of the basics about the yen, and what are the different ways you can trade it, and why is there so much discussion about it at the moment? Well, the number one way traders express any opinion about the yen is through the Forex pair known as the dollar yen. Now, before you guys freak out, Forex isn't the only way to trade the yen. A lot of people, when they hear that, think, oh no, I don't want to trade Forex. Well, if you're trading currencies, there are often many ways to trade them. You've got, of course, the number one place is the most liquid place to trade the currency. You also have the futures contract, Japanese yen futures, and there's also an ETF, the FXY. Oftentimes, along with the yen, the conversation comes up, and that's the equities markets, the stock market, the S&P, the Dow, etc. Also the Nikkei. And the reason for that is the yen is still, despite the fact that we have so many currencies at very low, near zero central bank rates, the yen is still considered by and large to be the most popular carry trade. In other words, you borrow or sell yen in order to buy other higher yielding assets. What's that mean? How does that play out? Well, if you take a look at, for example, dollar yen here, and the reason so many stock traders look at the yen is if we have yen weakness, we will typically see stock market strength. Now you might say, well, this doesn't look like a weak yen on the left, Raghee. In fact, that's an uptrend. Well, this quote is dollar, US dollar versus yen. So what you're directionally seeing here is US dollar strength, and along with that is the yen weakness. So if you want to look at something a little bit more directional, you could look at the yen futures. Now, yen futures look like weakness. Here's the Forex on the left, futures on the right. Now, why the inverse direction? Why is one heading up while the other is heading down? Again, it has nothing to do with the yen specifically. It has to do with where it is in the order of the quote. This is yen versus US on the right. This is US versus yen on the left. So directionally, the yen futures, you can see the weakness here. This usually directionally resonates with more traders, because if you want to short something, usually you want to see that thing go down. If you buy something, you want to see that thing go up, and that's what you can see more clearly on the yen futures or even the FXY yen ETF. The dollar yen looks unusual because you sell yen and then you want to see this chart go up because you want to see the dollar increase in value versus the yen. That's what you see here on the left. So that's the first thing. A lot of folks get kind of thrown off by the fact that yen Forex looks very different than yen futures, but it's the same two currencies. It's just quoted in a different order. So depending upon what it is you want to trade, the futures contract, the Forex, or the ETF, you have to pick your direction when you're playing the yen. So that would be long, the dollar yen Forex, short yen futures, short FXY. So the next question I get most is, okay, Rag, well, I want to get in on that ride. We'll use the yen futures here in this example. How do I get in? And why do I want to short the yen? Well, as long as the equities markets are up, as long as we're seeing the strong Dow, as long as we're seeing the strong S&P, as long as even the Nikkei, don't underestimate the importance of the Nikkei. As long as these are strong, it's easy to say that we'll continue to see the yen be sold or basically borrowed against. In other words, if I can grab the yen at that very, very, very low interest rate, use that yen to buy something else, that price differential, the interest rate differential, the return versus how little I'm paying to borrow yen is where I can benefit. Now, the other thing you'll notice too is that traders will look at the yen as a cue to whether or not the stock market should be strong. So oftentimes, yen weakness is a cue to stock market strength. And it's still something, again, even though there's so many currencies with low interest rates, low central bank rates, the yen is still probably the most popular currency to use for that barometer of risk appetite, as it's called, or stock market strength expectation. So yen weakness in and of itself oftentimes can instigate stock market strength, just as yen strength. So yen weakness, stock market strength. Yen strength heads up. Sometimes when the yen is strong, you'll see the stock market head down because that carrying, that borrowing is drying up, and traders feel that that is a reflection of lower risk appetite. People don't want to buy stocks. They don't want to buy higher yielding and oftentimes more risky assets. So there's your quick 101 on the yen. Now, anytime that I want to play this, and this isn't a trend, gang, we're looking for corrections. And in the next video, we'll talk more about what kind of corrections we can look for, what kind of time frames for yen. But there's the lay of the land on the yen. It's a terrific market. I've been trading currencies for darn near 2 decades. You don't have to be a Forex trader to do it. It is the largest market, but there's so many ways you can trade the yen. And you can even use options on the ETF or the futures contracts. So the asset class choices are very, very good. I'll see you in the next update.